Well, if you follow the stock market at all, I don't have to tell you, it is time to get out the Dramamine and the pink liquid and just try to stay calm. One day that thing is going up 400 points and then it's down 200 points and, you just never really know where you're headed here. That's why you need a financial expert, and we've called in the best again today. The president of the Sexton Financial Group, Sexton Advisory Group, Steve Sexton, here once again with us today. Steve, what do you even say about where the markets are headed these days when your clients come to you and with their hands in the air and say, what do I do?
Well, let's talk taxes first.
Okay, let's just take it one at a time.
One at a time.
Okay, this is the time of year when we start looking forward on our taxes. We're going to have to prepare them. We're going to have to kind of take stock of where we are. Good idea. Let's just take a deep breath.
First. This is a time of year where actually people don't look at their taxes, and they should, because if they're like I said in the last, not the last show, but if you're going to take a bonus and you're a business owner, do you take it December 31st or January 1st? Could make a big difference in your taxes. If you're a passive real estate investor, you know deductions go away, so it's time to take those additional expenses so you can take those deductions and pay less in taxes. If you're you have mutual funds or a stock portfolio, this is the time to take a look at where your turnover costs would be with a mutual fund portfolio and maybe sell off some of those losers to offset the winners so you don't pay as much or have that money flow onto your tax return. Really important to sit down and ask those questions to a CPA right now.
And these are decisions that if you're careless about how you approach the end of the year here, it could be thousands of dollars needlessly out of pocket and out of your portfolio just in an instant.
Quickly, a $500,000 portfolio that's in mutual funds, you could have $15,000 or $20,000 in a 1099. If you're in a 25% tax bracket, that's $2,500 to $3,000 that you can have fall through the cracks. Now, you could take a pretty cool cruise with that, couldn't you?
Yeah, absolutely. And so that's kind of where we want to head this whole discussion today is you get out ahead of the problem, you talk to somebody like Steve at the Sexton Advisory Group, get out ahead of the problem and start understanding which questions to ask and when. All right, let's get back to the craziness here for a second. What do you make of where things are right now?
Well, economists are saying we're going to have 10 more years of what the last 10 more years. That means 3 or 4 downturns, a lot of craziness. Europe's not fixed. Everybody thinks Greece is, but it's not. Italy's far worse than Greece because they're a lot larger.
Right,
okay?
Right.
And you know what? They don't expect unemployment to get down to 6% for another 5 more years. So there's a lot of stuff there.
Now, having said that, though, I know your approach is one of stop asking the wrong questions.
Oh, yeah.
Quit asking when's it going to come back or expecting that it's going to necessarily come back. You can always invest 365 days a year in something someplace if you know what you're doing, right?
That's true. That's true. Okay. So let's talk about that. Now, right now in the last 30 days, there's a report called the Trim Tab report, and it shows insider trading. These are executives of major companies. Now, in the last 30 days, there's been $19 of insider trading for every $1 of insider purchasing. And when companies do that, that usually means they're, on average, their performance for their stock is about 5 to 10% less than expected. Secondly, another indicator, it's called the TED spread. What it means is the 3-month Treasury with the spread between that and the LIBOR, which is what banks charge each other. Now, the wider the spread, the more jittery banks are going to be getting on lending money, which also tells investors that you better watch out for that stock. And then we take a look at the 10-year Treasury compared to the junk bonds. Now, the average spread is 6%. It's 25% higher at 7.6, which means these investors are expecting a larger default in bonds in the future. And third is the credit swaps. Now, this is foreign debt, but basically what's happened is these are contracts that are being paid to insure this debt. Right now it's at $1.9 or $190,000 for $10 million of credit defaults. Now, that's doubled since the first of the year, which means people are very, very wary of what's happening in Europe, and they're concerned that it might turn into a full-blown financial disaster, and hey, here we go. Now, here's the big thing for people. Many advisors are saying, hey, we've reallocated, stay the course. Or somebody, hey, they lost a whole bunch of money in 07 and 08. They're saying, you know, I'm going to wait until I get back to even. Here's the problem. Hey, we're 5, 10 years down the road. You've got back to even, but what about inflation? All that's happened is all your money has lost the purchasing power. You know what? You've just moved backwards. And if you're staying the course and we've got 10 more years of the same, you're probably going to be taking a step back instead of a step forward.
So the whole idea here, folks, get control of this stuff. Now, I know you're going to be on this show on Enel TV that you regularly appear on, but you got a special one coming up. I've got just a couple quick seconds to hit that because I know you're going to go into a lot of detail in that.
Real quick, we work with many top advisors for our clients. So we're going to have a CPA, a business broker, a will and trust attorney, a real estate professional. There's going to be a number of people there, but we're going to be able to delve into things that people have been asking into much more detail and have a real discussion around those issues.
December 4th, right here on San Diego 6, the CW.
5 p.m.
At 5 p.m. We'll see you then. Steve Sexton, the Sexton Advisory Group. Thank you. Crazy times, but solid advice. For more information, go to san diego6.com, click on San Diego Living. Up